So considering the high interest rates and soaring housing prices, the question is that how we can invest in real estate without having the huge down payments required. In this video, I am going to show you how you can invest in real estate with as little as $10. Yep, that you can do it by investing in REITs. Now, REIT stands for Real Estate Investment Trust. So, REIT is a company that buys and manages the income producing real estate, and that income mostly comes from the rent they collect from their tenants. And that rent is paid out to investors like us in the form of dividends. Dividends from the REITs are comparatively higher than the other stocks and companies. So stay tuned as I am going to reveal some REITs with high dividend yields. It includes REIT with yield as high as 11%. So don't miss out on that amazing source of passive income. So within few minutes, I am going to tell you everything you need to know about the REITs and whether it is an ideal investment tool for you or not. So now the question is, who should invest in REITs? So whether you are just starting with your investment journey and want to invest in real estate, if you are looking for a passive income source without any hassle of finding the property, managing the property, renovation, or finding a tenant, if you want your money back in near future and looking for the highly liquid investment tool, or maybe you need some time to save money for the down payment for your first home or rental property, or you just want to invest some portion in real estate to diversify your portfolio. In every situation, REIT is definitely an ideal or good investment tool for you to invest in. So there are mainly three types of REITs. First is the equity REIT, second is mortgage REIT, and third is hybrid REIT. So in equity REITs, they own and manages income producing real estate, and their primary source of income is from the rents they collect from their tenants. For the mortgage REITs, they lend the money to the real estate owner to buy the property and they earn some interest on that money. And for the hybrid, it's a combination of these two. So let's compare the REITs with the direct real estate investment. So what are the advantages of the REITs? So the first advantage of the REIT is low barrier for entry. Even if you want to invest as low as $10 in real estate, you can invest through the REITs. Whereas on the other hand, you definitely need some sort of capital to buy a property. The second advantage of the REIT is that you can easily buy and sell them. The REITs are highly liquid, so you can buy and sell them within minutes. Whereas for the direct real estate investment, you will have to give your time and effort, which is your sweat equity. Now, the third advantage of the REIT is you don't have to manage or renovate the property. You also don't have to look for the tenants on your own. Whereas for the real property, you will have to manage everything on your own. Now let's have a look at the drawbacks of the REITs. So the first disadvantage of the REIT is that you don't have any control on the decision of the property, whereas in the direct real estate you can decide what you want. Now the second disadvantage of REIT is that the prices of REITs are directly related to the stock market. For example, in 2020 when the market crashed, the prices of the REITs were tanked. However, in real world, the real estate market was pretty stable. The prices of the REITs are also dependent on the interest rates. So whenever you will see the changes in the interest rates, the prices of the REITs will act accordingly on the market. So the third disadvantage for the REITs is that whenever you will invest in the REITs, you will not get any tax breaks. However, for the direct real estate investment, you will get some tax benefits. The fourth disadvantage of the REIT is that the dividends which you receive from the REIT is taxed at higher rates. So if you are considering REIT as a passive source of income, then you should invest in REIT through your tax advantage accounts such as TFSA, RRSP, Roth IRA or 401k. The last disadvantage of the REIT compared to the direct real estate investment is lower capital appreciation in the long run. The reason for that is that, as per the law, REITs have to pay out at least 90% of their taxable income to their investor in the form of dividends, which limits their capabilities to reinvest and grow their business at higher rates. So finally, the time has come to reveal the REITs with high dividend yields you could consider investing in. Before getting into the REITs, I want to let you know guys that diversification and asset allocation are the two key elements for any successful investment strategy. You should also diversify within REITs, which owns properties in healthcare sector, retail, commercial, office buildings, warehouses, etc. You could also invest in REIT ETFs to diversify. So the first REIT I want to talk about is Allied Properties REIT. Allied's portfolio is mainly focused on the office properties. They also have urban data centers in their portfolio. It is currently providing 5.1% of dividend yield. Considering the pullback of 30% from March 2022, it could also give some capital gains along with the dividend income. So the next REIT I want to talk about is Northwest Health Property Real Estate Investment Trust. As the name suggests, it owns medical facilities. In total, it owns 220 income producing properties in Canada, US, Brazil, UK, Germany, and many other countries. It offers currently about 6% dividend yield, so capital appreciation could be expected investing during the market correction and holding it long along with the 6% dividend income. So the next REIT is Smart Centers Real Estate Investment Trust. As you can see, it is currently providing 6.12% of dividend yield. In terms of long-term capital growth, it is not very exciting. However, the potential downside is not very likely. You could wait for the correction and could open your position. You can also know more about each REIT on their websites. You can also check out all the information shared for the investors as well. They have currently 174 properties across Canada, and as you can see on the screen, they have diversified client base which makes them less vulnerable. So the next REIT is True North Commercial REIT, and they are currently providing 9.37% of dividend yield, which is definitely an amazing yield. Its price is pretty much flat around the $6 except some major market corrections. So getting into this REIT at discounted price and holding it long could be a positive investment in your portfolio. They are owning commercial properties in Canada. As you can see, they have 46 properties in 5 provinces with $1.4 billion in assets. So for passive income source of 9.3% a year, you could hold this REIT in your tax deferred accounts such as TFSA and RRSP. So now let's talk about the REIT for which you are waiting for so long, and it is Innovali's Real Estate Investment Trust. So as you can see, this REIT is providing 11.46% dividend yield. So they are mainly focusing on acquiring and owning office properties primarily located in France, Germany, and Spain. They are also planning to expand in other European countries. Considering the high dividend yield of 11.46%, significant long-term capital appreciation should not be expected. However, any correction in the price gives good opportunity for some extra percentage of returns. This REIT is definitely a good source of passive income, and you could consider investing in this REIT through your tax deferred accounts such as RRSP and TFSA. In this video, I am not covering the REIT ETFs to invest in. However, you can let me know in the comment section if you want to know more about it. Thank you very much for watching this video. Please do like, share, subscribe the channel. If you don't like the video, please dislike. And if you have any questions, you can let me know in the comment section as well. This video is just for an educational purpose and please do not consider it as any recommendation.